All right, welcome to Season 3, Episode 1 of The Arena, a show about mortgage, real estate, and the boots on the ground making it happen every day. So this one, I want to bring on someone special. We're going to go over all the information you ever want to know about financing, real estate, all that good stuff. His name is Matt Curcio. Matt Curcio has 25 years experience, over 1,400 transactions, closed over $200 million in real estate sales. And as of 401 today, his company, Real Brokerage, is now going to be called
the Real Remax Group. We are now going to be the second largest real estate company on the planet.
That's amazing.
Yeah.
All happening today as we're filming this.
Crazy.
Well, welcome, Matt. Glad to have you on.
Yeah, man. It's exciting.
So for those of you who don't know Matt or have seen the events that he's done, he is pulling in hundreds of agents, Southern New Jersey, Philadelphia,
New York, we go all over. Been to Lafayette, Louisiana. So if we have good partners in certain areas, we will get a room full of agents and we will help them become better agents.
And you have how many agents under you now?
So at the company, I crossed 1,200 this year. So that's exciting. Locally, I tell everybody locally around my office, within an hour ride, I think we're over 200 agents.
Yeah. And the only reason I want everyone to know that is they should actually listen to what you're saying today.
I've sold a few houses in my day and am still in the trenches. I am not any sort of a broker owner to where I'm out of business, but helping coach. I still enjoy selling real estate.
Yeah. I still think I'm full of shit, but people tell me, oh, you actually do make sense every once in a while. Yeah. So we can dive in. Today is going to be interesting because it's not going to just be us kind of bullshitting back and forth about real estate. We're going to really get into specifics. We're going to talk about not only types of financing, but what's the reality right now in the market, and what if you go with a certain type of financing, is it going to screw your chances for getting accepted your offer? We're going to go into house hacking, investors, the mindset you need to have in this market right now. But first, let's just get the state of the union. Yeah. What's going on right now in real estate? What are you seeing with buyers? How easy is it to get your offer accepted? What are they facing?
It's still hard, right? In South Jersey, people ask me, are you going to crash? Other parts of the country, we're seeing a lull and all this stuff. And I say, look, any home priced correctly or even aggressively, there's multiple buyers on it. And unfortunately, that puts, people with less down payment, certain loans, lower tiers when we're dealing with offers. So it is competitive, right? But there's also deals where sellers, convince the realtor or the realtor doesn't know the market that well and they overprice something and it just sits.
And then it sits.
So we are seeing that. And then we're also seeing a lot of deals die. I think we're at the highest percentage of deals falling out of contract that we've been in years.
I saw these stats. I'm seeing it.
Yep.
So why is it that a house, they go back and forth, negotiate, they want the house. What happens after that it usually falls apart?
I mean, my opinion is typically, inspections. People, there's also times and there's strategic ways to get under contract quickly that we use all the time, whether I'm buyer or seller, right? I want the deal. We got a good deal. Let's lock it down, right? We use attorneys, contract for that and all sorts of other things to get the deals locked in. But you have relatives that come in with an opinion during an attorney review period, which is what we have. If you're out of New Jersey, unfortunately, we're not bound to a contract for 3 business days. So that can be a headache when other people have opinions and, I want to bring my relatives to go look at the house. And then I don't think this is a good deal.
Your dad shows up with his tool belt.
Exactly.
We're going to see if this house is worth it.
Yeah. So, it's a stat. It came out they're dropping more contracts falling out than ever before.
But also that could be an opportunity, right? For other buyers that are looking to jump in there.
Which is where it's still a strong market. And I tell people in South Jersey, I don't think we'll ever, not ever, but I don't see us falling in values and having a decline in market value just because we're still lucky to be, inexpensive. Where we live, we have a low average sales price for the county. The closer you get to New York, it gets crazy with how much it costs on average each county. So I think we're tucked away in a little spot where we're going to stay steady and not do a rapid depreciation.
So you've been doing this 25 years. I think I'm close to that, right? Mm-hmm. And we've seen so much. We've seen all the cycles and we've seen the ups and downs. So it's easy for us to look back and go, I mean, I could definitely see how we got here today. But for someone looking to buy a house that's only been interested maybe for the last year or two, maybe they don't have that wider perspective. So let's take them back to just before COVID, 2017, 18, 19 versus now. What were you seeing?
I mean, it was a steady market and a fair market, where homeowners weren't getting above asking price. Could it happen? Sure. Was it a common thing like today? No, it was never a common thing. And, even my whole career, I started in 01, 04, 5, and 6 were the busiest, the rapid increase, and then it failed in 07. And that's when everybody chased the market downwards. And then we corrected for years after that. And that was where we would just hope to get an offer. And it didn't matter if it was 20 or 30 below asking.
Matt and I did a lot of happy hours back then.
Yeah.
One day we'll sell houses again.
Yeah. It was, that was tough. But 17, 18, 19, like that was a fair market.
Yeah.
Sellers are getting close to their asking price, but not all. First-time buyers can get offers accepted with closing costs being paid for, which is important because that, we need those first-time buyers to buy.
That was the biggest thing, you're right, is so many deals that I was a part of had closing costs built in. Yeah. You want $400,000 for your house? No problem. I'll give you $400,000 with $10,000 back towards closing costs. So that really only thing that the buyer's worried about is down payment.
Yep.
Then it turned into COVID happens, and that goes right out the window, right?
Yeah, I mean, COVID, I don't know the reason. Well, I'm not sure what the exact reasoning was for the amount of inventory shortage. I have an opinion of your home became your house, your daycare, and your office space. So if you were buying 3 in 1. And I think once people got in, they did not want to move again. And they maybe bought a little bit bigger than normal, because the kids were always home.
Well,
they
rates were so low.
Yeah.
Yep.
And so I think that kind of accelerated pricing. But, obviously the low interest rates, nobody wants to get rid of their mortgage. But, I don't know what stemmed the insane amount of over asking offers and deals where like it's okay that people are paying 50, 60, 70,000 over asking.
So we were talking before we came on how I sold my last house in 2019. And I remember I went in, I was asking $450,000. I paid $399,000 for it, and then I'll make a little bit on it. I was so happy. And I had so many offers, 100 people through in one weekend, and I had all these offers. Nobody was going over ask. Yeah. And one woman wrote me this letter, I can't wait to watch my child take her first steps in front of your fireplace. And it was so heartfelt. And I'm like, if you want the house, why don't you pay more?
And that's what's crazy is that was the customer. No, I'm paying your full price. You're asking this. Yes. That's what I want.
I'm going full ask.
That's it. In today's world, I had a friend call me earlier today. He sent me a nice listing in Mullica Hill, and it's up at 800. And we went 60 over on one a few months ago, and he lost 60,000. I think it was 70,000 over ask, and we lost.
Well, and that right there, that mindset shift of I'm not going to get this house unless I go way over, that's the reason we're seeing such an aggressive movement in appreciation. Yeah. Because these neighborhoods that would, before COVID, maybe they'd go up 4 or 5% a year, more nice, steady, gradual increase. Now, if I have a house that's $500,000 and my neighbor sells and they get 80 over, my house just appreciated 80,000.
Or they think they do, and it could have been a lucky deal.
I'm saying all things being equal.
Yeah.
But yeah, that's right. So that house is way bigger, and they don't take anything into consideration. Yeah. But that's the reason why we're seeing it. But again, like you said, it has to be priced right, and the market's going to tell you what these things are worth, right?
Yeah. So and pricing wise, I kind of tell people like going to an appointment from here, and the original number just went up $50,000 in a couple of weeks. And I'm like, you just cleaned out the house. Like, did you add a room or something? Because now you want 50 more? Okay, let's go through it. And you got to bring people to reality. And I tell people in the house, we got to get you near what the bank's going to finance.
Right.
If we shoot way over, it's just a waste of everybody's time.
Well, and so let's just go back to when I first bought, when you first got in the real estate in 05, 06, you had a situation where 100% financing, very loose lending laws, appraisers were friends of mine that were going out there, and I'm like, I need this. I'll get it for you. It wasn't as regulated.
Yeah.
So it was a lot easier to get whatever the asking price was, and people, could afford it. I bought in 06, and then almost immediately over the next few years, my house depreciated $100,000.
Yeah.
So here I am, upside down in a house. Couldn't sell it if I wanted to. People are short selling all the time, which, if you don't know, a short sale is when you owe more than what your house is worth, and the bank has to take less in order to sell it, and your credit gets destroyed, and it's just not a good situation to be in. So I stuck it out, and then eventually it was obviously worth more. I rented it, became my first rental property. I think a lot of people went through that same thing, but we're not in that situation now, right?
No, I was one of the leading experts in short sales in the whole market down here. I actually sold a lot of real estate professionals homes in the short sale market, and we consistently had probably 30 to 40 open files weekly that we would call banks, try to get lowered
What
values.
years was this?
That was after the crash, so probably 8, 9, 10.
Yep.
That corrected, and we were chasing backwards, right? I'll never forget Wilton's Corner, where it is.
Mm-hmm.
Winslow Township. My opinion on how we got to this is the government kept pushing homeownership so hard, and they wanted everybody to qualify for financing. So they forced the banks, your hand, to lower the credit, score to get a loan.
Mm-hmm.
And it's like you're making them give money to people who don't pay bills.
They can't even pay a credit card bill, let alone a mortgage.
Right. So when the market crashes and people lose their income, which bill do they skip first? Well, people with toughest credit probably don't pay the big one.
Right.
Other people with high credit are like, no, I can't not pay my mortgage. They're liquidating their house, their banks, their 401ks, trying to keep their houses. But overall, that pushed so hard. And I sold a house $475. I think a year and a half later, I sold the same exact house, $375.
Wow.
And it was the same condition. And I was like, this is insane.
Well, and if you look at Instagram, TikTok, YouTube, there's still so many people that are just going, this will happen again. You just wait. Don't buy right now. This has been going on now for 15 years. I've watched people say, don't buy, wait till the crash. It's happening. It's happening. It's like the doomsday cults.
Yep.
And to your point before, you said South Jersey's insulated. When you look at the news stories of houses that are depreciating right now, or there's too many houses on the market, you're looking at areas like Naples, Florida, California, parts of Texas. Why? Because they just had this dramatic shift up. Everyone was going nuts. And then now it's just coming back down to reality. It's still higher. Those houses are still selling for higher than they were pre-COVID.
Yeah.
But now they're just coming back to a more gradual incline instead of the rocket ship that they took in order to get to where they were. Jersey never saw that.
No, I mean, I don't think the numbers are the numbers, right? You can look at the appreciation rate per year. And prior crash, we were like 3 and 4 years of appreciation in 1 month or 1 year. So when you appreciate by 15% in a year, it's like, wait a second, you can't sustain this. There's not enough income in the area.
Right.
But now we didn't go too crazy. It's high. Don't get me wrong. Our county averages are up probably $200,000 since pre-COVID to now. But overall, it's still an affordable area, I feel. And, I'm just had a client call last week, and it's, what can we do? I said, they sent me something right around Trenton area. And I was like, you got to stay down 295. The closer you get to Delaware, the bigger the house gets.
Right.
The more you get for your money. And that's where we are. And that's where I sell houses.
Salem County.
Yeah. Anything, all of Camden County, as you get down 295, all the way down to Salem County, it just gets bigger and bigger.
Yep.
So people, depending on where they work, that's why we're still affordable.
All right. So I want to go into financing. And I know that people get confused still on what's available to them. when they want to buy a house. And there are many, but let's start with the main two. That's conventional and FHA. Conventional financing, think of it as backed by Wall Street. FHA is backed by the government. A lot of people also think FHA stands for like first time home buyer or something. It doesn't. It's the Federal Housing Administration. And so they have two very different ways of qualifying people. FHA is more for, let's say, your credit might not be perfect. Let's say your income might not be exactly where you want it to be, your level. Your debt ratios might be a little high. You've had a foreclosure or bankruptcy, something where you think that it's not going to allow you to qualify, and maybe conventional doesn't like it, FHA will. Right. So between the two of that, I would say 90 to 95% of everybody should be able to find financing.
Yeah. Yeah, it's misconception is common. You don't need 20%, you don't even need 10%. But, overall, those are the two main things. And we talked a little bit about short sale earlier. And that's where like it mattered what I was short selling. Was it government backed or was it Wall Street backed? Because there's two different processes. And overall, that's a great generalization to say this is how it works.
So as an agent and somebody who works with buyers and sellers, what type of financing are you seeing right now coming across with your offers, and why does it matter?
So, look, we'll look at everything, right? We list out if we just had a house. I think we had 8 or 9 offers come in. We just list them out on a spreadsheet and say financing, down payment, money in the bank, all that stuff. Who's got what? List them, show them to the seller. Here's your best number. Here's your mortgage is good. This mortgage is better, but it's lower. And it's typically the higher down payment is the better borrower, right? Especially if a home needs some work and there's some stuff that's going to come up on the inspection report. But in general, probably a conventional mortgage will win more right now than an FHA mortgage. However, educated agents with good lenders can get people approved.
So what he's saying is, if you have an inexperienced agent, you have a corporate type lender, or the banks, the Rocket mortgages, the people that aren't going to really put a ton of time and don't have the experience, there's more of a chance that that's going to fall apart down the road, right?
It's you go into this with trust, so knowing a local lender has local appraisers, and the real estate agent is well liked in the transaction.
Yeah, they both have reputations.
Right. Like they're going to try to keep their reputations as high as possible. They've done the work. We don't bring buyers out unless you go do all the paperwork on them.
Right.
Like they're not getting in, we're not meeting them at houses and getting them inside because it's just not worth our time.
So one of the tricks that I have as a lender when I'm presenting an offer with our agent partners is we always tell people that, and if you're watching this, and you're working with whatever lender, just make sure that this is happening. You need to pre-underwrite the file, meaning the Rockets of the world. Don't sue me, Rocket. The TE banks, the big corporate banks, they're just doing something called a pre-qualification. Whether it's conventional or FHA, they're just running a soft credit pull. They're taking a look, a verbal on your income, and going, yeah, you're probably fine. Here's a pre-qual letter. A pre-approval means we've researched your income, your assets, your credit. We've made sure that we've verified it. We've run it through a system called desktop underwriting, DU. This is something that every bank should be doing before an offer goes in. So I think that if you're working with the right team, whether it's FHA conventional, as long as it's the team that you're going to trust them, you're probably going to be okay.
Yeah, it's just important. Me as a listing agent, I want to know, hey, I know Matt's company. All right, did they do their normal thing on it? Like they said it's good, and I might message you or call you and say, hey, how, you have everything on this buyer, right? We don't have issues. And especially when we run into those scenarios, like the house I just said, we had 9 offers or something. There was a cash offer, and they were only third in line, but it was more than 10 grand difference. And it was like cash versus FHA. Cash wins. FHA, what could go wrong? Well, I already knew there was plywood on decking, and I'm like, somebody's got to fix it. Buyer said they would. They're in construction. Mr. Seller, it's up to you. 10 grand is a lot of money to say no to for a buyer that said, I'll fix the deck. Don't worry about it.
So let's talk about, that is the number one reason I see FHA loans get denied when we present as an offer.
Yeah.
And it's because they're worried about the repairs. And really, FHA cares. And for the most part, if you have holes in the floor, both conventional and FHA are going to have a problem with that. Those are safety concerns. Where FHA gets a little weird is if you have a house that's older than, I think, 1978, and you have chip paint on the outside or wherever in the inside windowsills, they're thinking that there's lead in there. So they just want you to scrape and paint over that for safety. They don't want kids eating the chip paint. Pretty easy, all right? Then you have the safety concerns. If you have more than 3 stairs and you don't have a railing going up the stairs, they want you to add a railing.
Right.
These are normal things. And then beyond that, you have, yes, if there's holes in the wall and the ceiling, if there's water leaking around, you're going to have an appraiser that's the boots on the ground for the lender. They're the ones that tell us if there's a problem with the house. That's our collateral that we're using. So don't think because you're going with conventional, some glaring issues with the house is going to be ignored.
Right, because I've had stuff come up on conventional. Sure. We sold one about a year ago now, and they called for lead paint on conventional financing.
And you've probably never seen that before.
And I was like, wow. And there was a lot.
Yeah.
It was a 120-year-old office building, mixed use, but residential mortgage. So it's whatever they want to call for.
Yeah.
And one before that actually called for structure on it. And I was like, oh boy, but the buyer was willing to do it. So let the buyer do it. It's our only
Let your agents negotiate.
It's our only deal.
Right.
So let's figure out how to get it to closing. And that's where experience comes in to where, we just had another one in Pittman. Our only offer was FHA. And no, it was a 3% down conventional. And guess who calls for the lead paint? The town.
Oh my God.
The seller was as is because they came down off list and the buyer had to do it. And they send a power washer out. They're like, look, we don't really call for this much, but it's just blatantly obvious. The shutters are falling off the house. And the power washer was like, I can't even blow that. The whole thing will disappear, So the buyer actually had their relative go take the shutters off, prime paint behind it, and that's it.
And that's the difference, of course. Yeah. If the buyer really wants the house, they're going to figure out a way to make it happen. All right, so let's talk about the down payment myth. And I think that still I feel like I've made so many videos, you have too. We've spoken at events. We're trying to educate, but still people just always think 20% down, that's what I need. And by the way, that was like an arbitrary number they made up years and decades ago and just felt like if somebody puts 20% down, they're this much less likely to foreclose on their house. And so all it means is if you're putting more than 20% down, you don't have to pay what's called private mortgage insurance, which that is an insurance for you. That's protecting the bank from you foreclosing.
So I think that's where we get into that because I think it's two things. I think initially it's you have to have a lot of money to buy a house. And the 20% thing rang in because of the PMI.
Yes.
You know what I mean? And that's where
consumers
just bite on
I don't want
that.
to pay PMI.
Yeah.
Here's what I would say is, what's your payment? What's your goal? Look at your reality. What do you spend every day? Yeah. What's your budget? What can you really afford? That's the number we need to focus on. Yeah. You can back into a bunch of different great scenarios then. So let's look at down payment, right? Minimum down payment for conventional is actually less than FHA. A lot of people don't realize that.
Right.
Minimum for conventional is only 3% down. Mm-hmm. FHA is 3.5% down. But again, if your credit is not quite perfect, you're going to want to go FHA because the nice part about it is that PMI, that mortgage insurance, is the same no matter what your credit is. It's just one flat fee. Where conventional, it's going to go up and down depending on your credit score. Right. And the other part is it takes your debt to income ratios into effect. On conventional, it might be impacted. FHA is straight.
Yeah.
And then, of course, your interest rate. Interest rate on FHA, pretty much going to be straight across the road no matter your credit score, unless it's gets real low. Conventional, again, what's your credit score? How much you putting down? That's going to go up and down. So the moral of the story is 3.5% is your minimum down. Mm. And then if you want to put more, if your credit is good, fairly good to perfect, then maybe we go down that conventional route. You want to see all your options in front of you and make the informed decision.
Yep.
And if you don't have a lender doing that for you, then you're working with the wrong person.
Yeah, and a different deal we just had under contract. we were VA, right? Which is no money down, which, when comparing offers in any multiple offer situation, people are like, well, hold on, there's another inspector. It's not even FHA, it's worse. It's not true. Like, they all just look for general safety. But I had to clearly explain on any of the houses we made offers on, they have 10% down if they need it.
Yeah.
This is a regular conventional buyer that went out and sacrificed his life for you, to live the way we live, right? He was an Army veteran. So,
all right. So we talked about minimum down payment, conventional FHA. Let's talk about real minimum down payment of 0%.
Yeah.
So there's two types of financing that allows you 0%. One is VA. The other one's going to be USDA, both government mortgages.
Yeah.
And there's doctor loans too, but hey, that's a whole other thing.
Yeah.
So you brought up a good point just now, which is VA. Military buyers. I think that an uninformed real estate agent might look at a buyer like this as weak because they're putting no money down. What do you say, and what do you look at when you see buyers coming in 0, especially VA?
Yeah. So, look, I enjoy where I live. I enjoy that we are in America. And for somebody that went out and fought for us to have the freedoms that we have, I think they should get a higher, value on their offer when it's being, perceived by other agents. Does it? No. Unfortunately, people say, well, what's their down payment? And I, go get a picture of them when they were in, Iraq or wherever.
Yeah. Here's their down payment.
Yeah.
Because it is, in my opinion, the best financing in the world. And they've earned the right to use it.
Yeah.
And it infuriates, I know both of us, when we see sellers or agents or people in the industry that look down upon our military buyers because they're not putting any money down. But here's the thing, when you're military, no money down. Now, if you try to do something like that with a normal loan, your PMI would be through the roof.
Right.
Your interest rate would be crazy. With VA, no PMI, and your interest rate's super low.
They pay a funding fee though, right? So that kind of offsets it.
So if you have any kind of disability income, that funding fee might be waived. So if you're 100% disabled, it's 100% waived, along with property taxes in New Jersey.
Right.
But yeah, worst case is you pay a funding fee based on how many times you've used your entitlement for VA.
Yeah. Which still, why not let them save the money?
Yeah.
If they can do it, and that's where it matters, right? I want to explain to another agent if they have any sort of, opinion about a VA buyer or a USDA buyer, that it's going to be worse because of the appraisal or, their report could tell the seller to fix stuff. Like, okay, but what if they're willing to do it?
Yeah, right. And that's when it's all part of negotiation.
Absolutely.
Now, going in the USDA is an interesting one. VA is very relaxed. You're gonna be able to afford, probably more than what you want to, pay every month with VA. It's one of the best, again, loans, if not the best loan in the world. USDA is a little different. USDA is very specific on where you can buy, and you can actually just Google USDA loans eligibility, and you could find the map on the USDA website. Of course, you reach out to me. I can do that for you too. Yeah. And you type in an address, and it'll tell you is it eligible or not. Usually, it's going to be a more rural area.
Yeah.
The other thing with USDA is it depends on how many people are in your house. The more people in your house, the more your debt to income ratio is opened up. Yeah. But it is very restrictive on what you can afford. So even if you are able to buy in a certain area, that specific house might be over the limit that you can afford with USDA.
Yeah, and that map is don't just go by townships. There's realtors that'll say, oh, it's only Salem County or whatever. And there's parts of the neighboring towns in Gloucester County, like Mantua has a section that is covered USDA.
I remember I grew up in Mount Laurel. There were condos in Mount Laurel that were eligible for a while with USDA just because they didn't update the maps from when Mount Laurel was farmland.
Right. And now, again, so people think Burlington County, no way, it's too many people or whatever, it's not as rural enough, they say, right? So, however, Southampton, right? A lot of it, I think, should still be, if I don't know that the maps
Medford, Southampton, Chemung, Tabernacle, all that's eligible.
Yeah, so you don't know where these loans are, and that's our job as realtors and mortgage people to know, hey, you might have a different benefit. and there might be a better way in. And this goes back to cost of living on a monthly basis. Like,
right. And what's real bullshit is a lot of lenders don't know how to do certain types of financing like USDA, and they'll just tell you don't qualify when really you do. They just don't know how to do it.
Yep.
So they want to stick to what they know. And speaking of that, we see that a lot with New Jersey state grants and loans. So let's get into that. How many people talk trash on New Jersey for being unaffordable and just, the house values are too much and everything is crazy expensive, right?
Yeah, I actually just shared today the New Jersey Association of Realtors average price. The single family was $6 something, believe it or not. Again, this is where I go to South Jersey and I say, we're lucky.
We are lucky. It is a lot
lower.
These
two counties, Burlington, Camden, and Gloucester, and with Salem, it gets cheaper and cheaper, but like they're in the threes.
Well, and I also saw an article today saying the average family of four needs to make $295,000 a year to live comfortably.
Yeah.
But I'm getting to a point, which is, despite how expensive it is, New Jersey actually has one of the best first-time housing programs in the country. We do a lot of them, but NGHMFA is the division in New Jersey that offers this. And here's how it works, the gist of it.
Yeah.
There's a few different variations of it, but basically you get a reduced interest rate and you get a baseline of a minimum $10,000 as a forgivable grant. And the way it works is these grants would be a second mortgage basically at 0%. And after 5 full years of being at the property, it's forgiven.
Right.
So minimum $10,000, that's more in the southern New Jersey area. When you get to central North Jersey, that goes to $15,000. Then there's this other thing called the first generation mortgage. And this is interesting. So this will give you an additional $7,000 on top of the 10 or the 15. And by the time you go to settlement, this is it, the interesting part. It doesn't have to be right now. By the time you go to settlement, if neither you nor your parents own a home, you qualify.
Yeah.
So
I just learned that rule, which was pretty cool.
Yeah, it's pretty cool. And not a lot of other people think I can't have owned a home for 3 years.
Right.
Which technically that makes you a first-time buyer again and allows you to qualify for these programs. But the first generation, so if you don't own a home and let's say your parents sold and they're renting a place or whatever, whatever it is, or living elsewhere and they just aren't on the deed of the house, you qualify.
Yeah.
So we had we talked about how other lenders that aren't signed up for these programs, because you have to be not only signed up but in the good graces of the state. It's not easy.
Yeah, you have I'd assume it's a certification of some sort for you, but overall, that's important to me, the agent who's reviewing offers. All right, who's doing the state program? Are they qualified to do it? Like, do we know what's their opinion of the time frame? Because you're going to tell me 45 days. Another bank's going to tell me 60 or more.
Right.
And I'm saying, why?
Yeah. When the reality,
there's other companies doing it in 45 because they have their relationships built.
Yeah, and we'll do it in 30.
Right.
The difference is, have you ever worked with the government? Have you ever had to do anything? The DMV, especially in New Jersey, it's brutal. Yeah. But if you know how to work the system, if you can anticipate what they're going to want, what they're going to need, does it make sense? Who cares?
Right.
You're not going to fight them.
Right.
But if you know how to work with them, they're going to respect us. We're going to respect them and we'll get it done. So we're closing these loans in 30 days. I'm not promising, guaranteeing any of that, but we're setting the expectation of 45 and then ready to close in 30 and everyone's really happy.
And that's very important because, over my career, I've seen numerous deals go south, right? And don't close or need another month, or you give them another month and they're still not done, right? And mortgage rules changed years ago where you can't really do that last minute anymore, but
TRID.
TRID. Today, it's just important to me to know, hey, how long is your lender saying? How have they done this process? And if it's more than 45 days, I'm going to start questioning,
we're going to go with somebody
why do they need, and should they talk to somebody local who has the New Jersey part of this handled, not some maybe big bank that's just licensed in the state of New Jersey, but that's why, and having good realtors and good mortgage people on a deal, that's why it matters.
Right.
And that's where consumers, if you are shopping, make sure your person is a professional, respected in the industry, locally, whatever, so that your offers get received as best as possible.
Yeah. I think another good program to mention is police and fire.
Yeah.
So anybody out there, you are in law enforcement, your family, also in fire. The benefits of going with that program is just a reduced interest rate. There are some caveats. You have to have more than 15% down in order to qualify, and then there's going to be a monthly fee, kind of like a PMI that you pay. So sometimes it's worth it. Sometimes maybe going less down, holding on to that money, using it to fix up the house is the better play, and just taking a slightly higher rate. Again, you want to go to a lender that does it all. So all your options are all laid out. You make that decision for yourself.
Yeah, and can you refi into police and fire or not now? I don't think not. I think right now it's off, but sometimes they let you.
Sometimes they let you.
Yeah. So again, go to the don't get told no by somebody who you don't really know if they have the products.
Get a second.
Figure out if it's, go to somebody local where you can walk into a branch and say, hey, have you heard of this? Is this something that I can do? Or just find us.
That's right. All right. So let's talk about renovation loans. Very misunderstood, often not done very well, and it ends up being a nightmare.
Yeah.
So I definitely wanted to touch on it.
Yeah, it's important in houses, our listings, we need to know, hey, this is past the point of paint and carpets, right?
Yes.
We're going to have some people that really lower the number on you, Mr. Seller, because it needs a lot. I'm actually going to a house later today where it needs a lot. And, I have to explain to that seller, like, hey, we can't go FHA. We can't go VA. It's not a USDA area, but we can't use these couple loans. And now we pull, conventional cash. What are they going to want for all their down payment monies? They're going to want to fix the house. Anybody who wants to flip the house, it's a different product. So it's important to understand what FHA, there's two versions. So why don't you share the two different versions of the K loan?
Yeah. So I always recommend just going FHA. There is a conventional version of this, a bit of a nightmare. We could always talk about, but FHA has the 203K and the 203K Streamline. And the Streamline is what I always try to get people to focus on. A 203K full-blown renovation, it's going to be a lot.
Yeah.
You have to get more people involved, other inspectors involved. I can go through this separately with whoever wants to really dive in, but the Streamline is a lot simpler, where if you stay under $75,000 in renovation, you have a much simpler, more streamlined process. Mm-hmm. So let's say you go in, you're like, man, I need new HVAC, new roof, I need floors, the major items, right?
Yeah.
Now you could do that under $75,000. And you could throw in some other major items that paint, things that are just going to cost you a lot of money that you don't have. I mean, you just maybe overextended a little bit on the house. Maybe you put all your money in the down payment closing costs, and whatever money you have left over, you wanted that for furniture, or you just needed to live. And so now imagine if you can roll in $30,000, $50,000, $60,000 in renovation costs. It's a beautiful thing. Then the best part is if you did get the house for cheaper, which you probably did, when it's all done and your house is now worth X, you can refinance it into a conventional loan. So you go from FHA over to conventional. So this is not as straightforward as I'm going to buy this house for X. I have $100,000 sitting in my bank account. Right. God bless you if you do.
Yeah.
Most people don't. And so this is another avenue to buy the ugly house on the street that's going to give you instant equity.
But don't think it's just for that, right? And this is where I've used Streamlines for years. Streamlines used to be as low. I think it was
35. It was 30. Oh, back
it was
then.
10 grand.
Yeah,
at
back
one
in the
point.
day, it was low.
We've been doing this for a long time, but
it was 35,000, and I think like last year they increased it to 75.
Yeah, which is great because once you cross that barrier, what he's talking about is just you have to have your contractors. They all have to be licensed, insured. The contractors not only have to foot the work, they have to foot the bill of the materials now
before they get
the money. So they're not the cheap contractors. They're not the $10,000 kitchen. They're the $35,000, $40,000 small kitchen that you want to put in, right? To where it's like, okay, we need, that's that whole other one. So the Streamline, it's like, no, we can do this, this, this. I want carpets. I want paint, So just think as a consumer, the house that needs the carpets, think you're going to get to it, but life happens, right? Or the windows, right? Life is going to life you.
Forgot about windows. Yeah,
Period.
huge.
Yeah, they're up to like 500 a window now. It used to be 250 a window. Now they're double. So you do a house with 20 windows, like that's just unaffordable. To have a mortgage and then have everything structured in your life, and then like, oh wait, now we need a loan from Power Windows or any of those big companies. So anyway, these products can help so much. And then when we have ugly listings to sell, it's important that we know what can be financed. And hey, the streamline might be something. You like the house. I know you like the house. Here's something that, you buy it for here, you put 50 on top of it. Can you afford it? It'll be new. And they make sure it's done by professionals or they don't get paid.
Right.
So.
Yeah. And you just can't beat location.
Yeah.
That's the key to all of this, isn't it? It's, sure, you could buy a brand new house in Franklinville. But let's say you want to be 45 minutes north. Are you going to change your entire family's lives to be in an area just because you can afford it more? Right. Or are you going to get a little creative? Are you going to find that house that's going to be cheaper? It's just going to be a little bit more work. And using tools like this, I think that's the key.
Absolutely.
So one of the hottest topics, the most talked about phrase that I've heard definitely over the last 5 years since houses started kind of taking off since COVID, is the term house hacking. And I can't tell you how many times I'm scrolling through whatever social media and I see somebody talking about a version of this. Yeah. So let's get into it. You're talking to, we have two people here. We both own investment properties. Yep. We both renovated homes. We both have house hacked ourselves. And I think currently own, decent portfolio of properties. I've always said that I look at houses, every house I own is a mini 401k. And it just gives you so many more options down the road on what you want to do with it. So let's get into it right off the bat. What are your thoughts? What conversations are you having right now with young buyers that want to start? They don't know how to start. They want to get into it somehow with house hacking.
So I'm at a weird point in my life to where I'm almost empty nesting, which is crazy to me.
I forgot how old you were.
Yeah. I don't look it.
Yes, you do.
I'm way younger than him, obviously. But now my kids are now 19 and 20. So I have boy 20, my son, a stepson who's 20, and my daughter who's 19. And they're at the point in my home where, it's time to be like, hey, let's figure something out.
Get you the hell out.
Yeah. It's not a free-for-all. But no, so I'm known as the real estate guy to not only them, they're friends. And they're like, how do we buy a house and all that stuff? So, in general, house hacking, I was lucky enough. That was my reason to get in the business, was I wanted to invest. I had no interest, no knowledge of sales.
Oh, I didn't know that.
Yeah. And I wanted to buy houses. I wanted a different income. I was with my brother one time and we're like, how do we make more money? I don't know. That guy sells real estate and buys real estate. Go talk to him. What's he tell me? Go read this book, Rich Dad Poor Dad.
Rich Dad Poor Dad. Yep.
Changed my life.
That's amazing.
I registered for a real estate course, wanted to buy an investment, happened to see a kid around my age, who was 2 years older than me. And I was like, aren't you in real estate? So, hey, yeah, you got to come work for me when you're done. I ended up doing that. And I ended up liking sales and getting good at sales. So I switched into this. And I bought a duplex as my first home. Renovated, fixed it, rented it. Then bought a single family from a bank. And it was a house we used to party at because the guys that were living there, their older brothers who I was friends with, would have house parties all the time. And one guy owned it. And then I come in and I'm like, well, I kind of know them. The bank's foreclosing, or the bank owns it. I could just buy it and you guys could pay me. Is that cool? And that's how I got my first single family.
Wow.
Crazy. So.
And you had said before, someone has to be the guy.
Yeah.
Someone has to, bite the bullet and be like, all right, I'll buy it.
Yep. And that's what I was lucky enough to have, the relationship with the other realtor, to be trusted to buy it. They had a lease that was good. So the bank couldn't really sell it to just anybody because nobody wanted it for the lease value. And, it just all worked out. And I had already living with roommates, dealt with rent and all that stuff between friends. So I was like, I'll be fine. It'll be good. And I'll have a low mortgage and, we'll fix it too. And we all did. We actually fixed that together.
Well, that's the ultimate.
Yeah.
Not only you have people paying you rent, but they're helping you fix the house.
Absolutely. Yeah.
So let's be clear on what we're talking about with this term house hacking. It's just, you are trying to get into a house that you ultimately probably couldn't afford on your own, but you're getting in there in a way where you're either buying a multifamily, and what I say multifamily, a duplex, triplex, or quad.
Yeah.
If it's over 4 units, it's commercial.
Right.
So if you're buying up to 4 units, you can go with an FHA loan, putting 3.5% down. And there's the hack, right?
Yeah.
If you or I were going to buy the same type of property, a 4 unit, we're putting 25% down.
Right.
Minimum 20, but still, probably 25 to get a decent rate.
And wait, the thing that's important is in FHA, for the right deals, assuming there's not 10 bidders on it, you can have the seller pay your closing costs. So you can literally get in for almost just 3.5%.
Yes.
And that's where I'm telling my son, his friends, and everybody, like, hey, somebody get 10 grand and be the one that wants to go buy the house. Once you find it, we'll help, and hopefully you can get in a property, 300,000-400,000. It's a duplex, so you're collecting a chunk of rent here. Maybe there's a 1-bedroom in a triplex. You could live in the 1-bedroom. But if you need the rent or want a friend to help you, maybe you have 2-bedroom and then a 3-bedroom, and you collect that rent and another room's rent. So
yeah, and the beautiful thing about a multifamily is they're going to take 1 unit. If it's a duplex, one's yours. You got to live somewhere. The other one, they're counting 75% of that rent as your income.
Yeah.
So now you're going to be able to afford more. So if you're looking at a 4 unit, right, and it's collecting, the other 3 units are collecting, $2,000 a piece, let's say. Right. All right, that's $6,000, and you're taking 75% of that. That's your income. Now you're going to be able to afford way more than if you were buying a townhouse or a condo on your own.
Yep.
And I think people get scared of that. They're like, wow, I can't afford a $500,000, $600,000 house.
Right.
You're right. You can't afford it, but the property can.
Right.
And it cash flows. So when we're talking house hacking, the most streamlined version of that is buying a multifamily. But you probably know as well as I, there are not a lot out there.
Yeah.
So what's the other version of the house hack?
Some sort of a single family, right? The deal I stepped into was a 4-bedroom house. 3 guys, well, before me, there was 4 roommates. By the time it was listed for sale, one of them moved out, and I was like, hey, if I buy it, you guys can all stay. You good with this amount of rent? Back then it was like $350, $400 a month. And I think my mortgage was maybe $1,800. You know what I mean? So it was fair. I kept it fair. I didn't go in and say everybody's got to wipe out my mortgage and I live for free, So, yeah, like a house, I live by Rowan University. So there's still parents and families that call us as realtors and say, hey, is it smarter for me to buy a property and own it for 3 to 4 years for them to rent directly from me? And sometimes, years ago, it was a little bit more affordable, and there's a whole investor group that focuses on Rowan now. But overall, yeah, it's not a bad investment.
Well, I love you're right in the epicenter of this. If you're in a college town and you have student housing around you, so much more opportunity.
Yeah.
And I think that, people, now listen, with that comes the other headaches where they're going to have parties.
Yep.
It's probably going to get trashed, so just have a good contractor, set the expectation, properly. It's just going to happen. But in the end, you're looking at an asset that's going to be appreciating, and you're going to have people helping you pay that down.
Yeah. And I just yes, college is rough. I had a duplex catty corner from Landmark.
Oh my God.
Now it's a giant building for Rowan. They bought it from me.
Yeah.
But that one, I had a family on the left side. It was a side-by-side twin. And there was a family on the left side, I think, most of the time. And then the last year I owned it, college kids were on the right. And it was routinely college kids. And the left side, they didn't complain much, right? I even had friends that were building a house, stay there for like 6 months. And they were like, no, they're not bad. We get along with them. But then the last group I had, man, they demolished it. And it does stink when you go into a property where you painted, and I'm about to do this week.
You
unfortunately.
just talked about that, yeah.
So my single family is up, and I went in and I was like, man, it's tough.
It's amazing
People
how
don't treat it.
some people live. You're like, holy crap.
I literally told my daughter, I walked through it with her, and I said, go home and thank Michelle.
Yeah.
You know, thank your stepmom, because this isn't how you live.
So I created this quiz online, and I just did it for fun. But like all these people started doing it, and it sparked a lot of conversation. And it basically was like, how to get your kid out of your effing house.
Yeah.
And all these parents were like, yes, I want to take that. But it was like Step Brothers, where you had these like 40-year-old kids still
Can see it, dude. Like,
still in their house.
Yeah.
And I'm thinking about the average age of a first-time buyer right now is like 40 years old.
Is it 40 now? I thought it was 30 something.
No, yeah, it hit 40. It might even be higher. And look, I think also that's it's not implying that every 40-year-old's at home with their parents. So they're just renting. Yeah, they're just renting.
Which is crazy because they're paying more than a mortgage.
Right.
A lot of them, depending.
And they're just hoping I'll get married, I'll pay off my debt, I'll make more money, and eventually I'll be able to afford it. So I just wanted to, we were talking about house hacking, investment, that mindset. I just wanted to carve out one section of just parents that are watching this, that have children. Your kids are 19, 20 years old, and maybe their kids are in college now, they're about to graduate, or they're graduated, and they're like, how do I get them out of my house in the nicest way possible? Yeah. What is your advice for them on where to start and what kind of mindset they need to have?
So, in general, I'll take my position. Like, my son was at a job and had a girlfriend, and the girlfriend's coming over, and they're up. She doesn't leave. We have a no sleepover rule. You don't pay rent. You don't have people sleep over.
I love that. Let me write that down.
So, and even if they did, I'll pay you $10 rent. I don't care. Nobody's sleeping over. You're not married.
Yeah.
But, just putting him in bad habits to where I was like, hey, I kept reminding him, hey, we're not going to do this. You need to find somewhere. Because you two want to stay up late and fall asleep on the couch in the basement or go to her house late. We're going to find you a place to live. Mm-hmm. And I happened to find a duplex. And I said, here's what we're going to do. And this is my opinion. If you're a parent that wants to help and maybe build some equity with your child, I just happened to run into an opportunity. So I was like, hey, you know what? Both units need work. I've taught them to be a little handy. You can live in the dirty one the way it is, right? And you can fix it around you, and we'll fix the other one. And if you do the right things, we'll carve you out some equity in this.
It's almost like you had a contract with him.
We were going to, right? And then he got a job opportunity that took him to Texas. But that's what I was thinking, right?
Well, that's a great framework.
Yeah.
So basically you're saying like, and this is what I'm seeing.
And I mean, I went to attorneys with this. Like, we had conversations about how to structure it.
Make it legit.
Yeah, like it was going to be a true a contract for him to be the super of the building and maintain his own unit.
So if you want to structure this, he's already done the work.
Yeah.
So they can come to you and you can help them draft that. So what I'm seeing a lot now is we're having kids, quote unquote, 20s, whatever. They're buying a house and they're getting monster gifts from their parents. And then we're sourcing the funds of those gifts. And where do you think it's coming from?
Retirement.
Yeah. Equity lines. They're pulling it out.
There is a certain amount of money that will make you peaceful at home, to invest, where you can say, hey, we're going to help you get started. Right. Yeah. But even if, there's plenty of people that can't afford that.
Right.
But overall, like, that was my vision for my kids. If I had to chip in and help, and maybe, he didn't have the money. So I was like, well, my stepson has a good job, union, right out of high school. He's already at like $35 an hour, 30. I think he's going up to like 38 or something. So that's like over 70 grand.
Yeah.
He can probably afford it.
Right.
Right. So he can afford a mortgage right now. So we're just trying to figure out the right house. And again, you got to find good roommates before we do this, because you can't move in and then go house poor.
But I love the idea of, even if like your kid graduates college, they're getting, they're $40,000-$50,000 a year. They can't afford the type of house that you would want them in, but kind of being partners with them.
Yeah.
Going in and go, hey, listen, I'm not just going to give you money. I'm going to buy a property with you, and we're going to go in and we're going to split the equity up. You want to go in there, fix it up and manage it and all that good stuff. then we're going to split. It's basically, you're just
there was no ownership up front. Let me just be clear.
Yeah, okay.
It was literally like, you're going to have to earn your ownership.
I love that.
Because the apartment, the one apartment was dirty and it needed a full paint job and it needed floors. I will drop the supplies off. You are 20. You have friends that know this stuff that are in this work field. Get it done for the cheapest you can.
That's a great idea.
Yeah.
I love that.
Yeah.
And then I did want to touch on, there is another way of getting your kids out of your house, and it is a gift of equity.
Mm-hmm.
So I see this a lot with grandparents, right? They live in a house, they're relocating to an over 55, they're going to Florida, they're going to Del Boca Vista, whatever they're doing, or a retirement, community or home. And the way a gift of equity works, so everyone knows, is if you have more than 20% equity in your home, you can gift that to a family member that wants to buy it. And so if you have a house that's worth $400,000 and you owe $250,000, or a lot of them owe $100,000, what do they need to make out of it, right? And that's where you want to work with a real estate agent who's going to tell you what's it really worth. Yeah. And then that way you can, and then a lender like us, we can back into that number. So we'll structure, here's the purchase price. Yep. Then 20% of that goes as a gift towards the mortgage. Now the mortgage has no PMI, great interest rate, and we can even build in closing costs. Yeah. So your kid can literally get in that house zero out of pocket.
Yeah. And that's important to know. And we actually have a flat fee service, to where if you're selling your house to your aunt or a relative, we can do it for a flat base fee.
Oh, that's
we don't
awesome.
Come in and charge a full commission rate.
Instead of asking ChatGPT.
Right. To build me a contract. Good luck with that, because that could go way bad. But no, before we do that, I need these details. Like, hey, are you related? Because we can do a gift of equity that gets you in at zero down. Is there maybe the heating system needs to be done? Why don't we have that replaced as part of the deal?
Let's build that in. Yep.
So there's so many different ways we can structure a deal like that, but gift of equity, I use it. We're actually talking with an estate right now where there's a kid that wants the house. Not related, but it's like a step kid of one of the 4 siblings or something. And they're like, well, what's the fair number? And I said, here's the fair number. Now you're going to pay me. And if we don't get full price, let's say you lose 10%. Well, are you going to give that 10% to the kid and let them have it? And by the way, you can also use gift of equity. I think you're in the right line to do that. Right. So they're all figuring that out now. And then, we can.
That's why.
We can deal
Again,
with
you need the right team.
Yeah.
So there's a lot of confusion on grants and just money all around for first-time buyers. And I actually don't blame anybody, because we are one of the few lenders in the area that we lend all the New Jersey programs. And so including police and fire, we'll do that program. But beyond the state, there's actually county-to-county grants that a lot of people don't know about. So on top of the money you can get from the state, depending on where you want to move, there might be additional money available. So in order
just define that real quick, because a lot of people get confused. There are grants, there are second mortgages. Some are forgivable, some aren't. So just share
so
the outline view, right?
Typical grant that I'm talking about would be, this is a second mortgage, and then it's forgiven after usually 5 full years of living at the property. All right. And then if you want to refinance or sell within those 5 years, you owe the money back.
Right.
It's really as simple as that. But what we did was we actually put together a guide. It lists all the state money. We actually included Pennsylvania too, Philly and Eastern Pennsylvania, just because they have great programs. And then we went county to county based on where you want to move. So if you want the guide, real easy, all you have to do is message us or comment below this post. Yep. We'll just send it to you. We try to automate these things. Click here, download this. But the easiest thing is we'll just email it to you. Just give us your email. But it's a great guide for you to have. Share it and
give it to your friends. First-time buyers, let them have it, because we go back to, we've talked about living on a budget. To me, that's everything in what I do for a living. You live on a budget. Yeah. And if you can help save somebody money.
I mean, there's some counties giving away $25,000. Right. People don't even know. So imagine you get into a house and then your neighbor tells you, oh yeah, we got that $25,000 grant. You're like, wait, what?
Right.
And all it took was a lender or an agent that knew about it. It's an application. That's all it is an application.
Yeah, so get the guide. We'll get it somewhere downloadable, and we'll get it out.
We'll get it out to you. Matt, I think we've said it all.
Yeah.
So thanks so much for being on today. Any last words? Anything that you want to, how to get in touch with you, how to get started? I mean, we went over so much. So
yeah, I mean, look, this is important for our industry. I always tell my agents that, join me, or new agents, they say, what's the best way to learn as quick as possible? Because you're a sponge when you're just getting started. And I say, go to lunch with a lender, not for a free lunch. You just need to hear.
It'd probably be a free lunch.
It probably would be, especially Matt. So
thank you. Yeah.
But no, seriously, like knowing mortgage, it's the most important piece of the puzzle. And it's the piece where if you grasp it as a realtor, you're going to have much more educated conversations with consumers. And when you're the realtor having the better conversations, who's that consumer going to choose? Right. So to me, this information is super valuable to your career, to your life. Show your kids this kind of stuff. Everybody should be learning this stuff. I wish more people were recording content like this. Most people want to, dance in front of new listings, but
which, hey, that's entertaining.
Yeah. But
well, when you're buying the largest thing you will ever buy in your life, and you're most likely going to finance 80% of it or more, that financing part probably needs to be paid attention to.
Yeah.
It is not a transactional thing.
Right.
My biggest thing lately has been, I know how easy it is to buy stuff online. I do it all the time. It's Christmas on my doorstep every other day. Hi, honey. I love you. But this isn't Amazon. This is, you are buying a house. Buying the right house takes a lot of expertise and experience, sometimes 2 decades worth, 2.5 decades. Yeah. And then to finance it, also making the wrong move could cost you a fortune.
I've sat at the table where I had reviews with people where I can literally say, can you just tell your friends, like, I literally, one conversation saved you $50,000 with the grants, the interest rate differences, and the better mortgage programs. And like, just share that with your friends,
right?
Because it's important that I do my job, and I can't get the word out as much as you can. So go tell your happy friends.
That's right. So. Well, thanks so much again for being on. And again, if you want to contact Matt, you can find him all over the place.
Yeah.
I mean, you can't get away from him.
That's right.
But all the socials, and then what's a good email for you?
So mattcurcio.me is actually a new, like kind of a link tree thing, and they can download my contact info right on it.
Perfect. All right, man. Until next time, I'll see you guys.